Hi, everybody. It's Gio Aretos, the principal investment advisor with the Real Estate Investment Group and broker at Nationwide Realty here in Las Vegas. Thanks for joining me today. This is going to be a market update. My inbox has been super full with clients and followers on our social media who've been asking what is actually going on in the Las Vegas real estate markets. There's a lot of news out there that is conflicting. Not the first time or last time that we're going to see it, not the first time I have seen it. Seen this many times through my history and my career when I was in the stock markets and the commodities markets. And so I actually know what is going on and how it's happening pretty well here. And I'm confident that it's going to happen very similar to the ways that I've seen it happen in the past. So I'm going to jump right in. The topic that's on the front of everybody's mind is interest rates. So I'll start there, but it's really not the only thing that's going on. Interest rates is happening. The news is happening. It's about time that interest rates started to go up. I think what happened was we've got very comfortable with interest rates being, close to zero, and we forgot. I'm 46 years old, and in my parents' generation, their interest rates were 15% and above, and that was normal. So we're way, way, way below what historic other rates have been. And so we're still low. I think it's coming up. People are getting scared. Oh, there's no more buyers in the market, and so here's what's going on. And to confirm a lot of my forecast on this, I consulted with our longtime financial partner, Nelson Morales from Blue Leaf Lending. And if anybody would like to chat with Nelson, by all means, reach out to me and I'll be happy to connect you with him. But Nelson's always consistently had a grip on the market from the financial side. And it's always provided me with valuable and accurate information for us to make our decisions off of in our own investment portfolios. And that information has often helped lots of our clients make smart real estate decisions, buying or selling. So I asked them first, I said, hey, what do you see? Where are we at the end of 2022? We've seen interest rates rising. Right now, they're at 5 3/4 for a conforming 30-year fix, just a normal middle of the road loan, average median price point loan for a conforming loan. So full doc loan. Where are we? We're at 5 3/4 right now. Where are we going to be by the end of the year? And he said, we're going to be at worst case scenario, 6.5%, best case scenario, 6%. So there's a very, very small margin between where, that best case and worst case scenarios, which is actually kind of a good thing because volatility has already been priced into the market. We see this from all the way from the bond traders all the way down to actual banks and lenders like Blue Leaf. They packed this in and built this into the interest rates. These Fed rate rises, they've packed it in for a while now. So it's actually not going to fluctuate much more. I mean, it could go up, 1/4 to 3/4% more by the end of the year is what Nelson's forecast is. And I agree with it. When I asked him, I said, okay, great. Now, at least we have a hallmark or a bellwether to kind of measure things against. So I said, well, tell me more about what's going on in the market, the rates market, and anything interesting. Is there anything worthy of note? And he came up with a really interesting one. He said, well, actually, he said, right now is the perfect time to buy a jumbo property. And so what is a jumbo or getting a jumbo loan? It's any property that's over $647,200 as of today, as of the recording of this. That's the minimum amount. So it needs to be $1, at least $1 over that amount. And he said right now the rates are at 5. And they're probably not going to change very much. In fact, if anything, they may end up going down because the 10-year jumbo is at 4.875. And the jumbo loan, just so people understand, the jumbo loan is not, they don't go by the same rules as a below jumbo loan limit conforming loan. So jumbo loans are not securitized. They're not taken and turned into REITs and other types of investment instruments that currently exist and still exist. Jumbo loans don't work like that. They are typically just sold to an investor. And so the entire process is different. And it's a really good time. He said they're probably not going to move for a little bit either. He doesn't expect them to. So that is pretty helpful to know that if you are going to buy a jumbo loan, if you're going to buy a house that requires a jumbo loan, here's a couple of interesting things. If you are buying a house that's under $950,000, the interest rates are going to be in a holding pattern. They're going to be stagnant. However, homes over $1 million might be the right time to buy now. And there's a couple of reasons for that. First of all, the interest rates could change and it could affect $1 million plus homes, but the inventory is what's really awesome right now. There's a lot of inventory over 1 million that is very interesting. And before it goes up in price, because interest rates are still going to remain low for these jumbo loans, could be a perfect time to to execute a property over 1 million using a jumbo loan. I thought that was a really interesting point. So then I asked this, well, what do you think is going to happen after, when we're maybe March 2023 or June or September 2023? And he said, well, his view is that rates could go down at some point in 2023. And he feels that if there is a chance that something's going to happen, it's actually that they're going to go down and not up. I thought that was a really important key factor for people that are trying to time a purchase or a sale, because as I continued to analyze what he was telling me and then merge it with the real estate data and research that I've been doing, I have an idea of what I think is going to happen in our market. And I'm talking specifically with Las Vegas at this point. What is likely going to happen if that scenario does occur and you see rising interest rates until the end of the year, and then the possibility of the rates dropping down? I said, well, where do you think they could drop down to? He said, maybe into the low fives. 5.25 was one of the numbers he threw out there. Could be best case scenario, drop down. So there's a good chance that we're going to see some reprieve and a little relief in the interest rates. But if it ends up going down and not up, then I think here's what's going to happen. Sellers are either going to hold their properties and wait it out, but those sellers that can afford to do that might. For the rest of us, the sellers that want to sell or need to sell are going to put their properties on the market. And because the interest rate is now a little higher, and it might be affecting those buyers that were maybe on the fence, that were like, oh, we can finally afford, XYZ for a house, and this is a payment we can afford. Maybe there's a small amount of those people that get knocked out by a small interest rate hike like what we're seeing. But for the majority of things, I think it means that people are going to maybe take a little more time to enter the market. They're not as much in a rush unless there is a pressing need. And there is, of course, going to continue to always be a pressing need for some people, moving, changing, upsizing, downsizing, changes, life events that happen. But for sellers and buyers that don't need to enter the market, they just want to enter the market, maybe that softens a little bit. So what I see happening is I see inventory, sellers that do continue need to sell their properties. I see them putting their properties on the market. And if there's no pressure to sell, which I think we would continue to see pressure to sell, remain constant, which I'm not seeing a lot of pressure to sell. A little bit more pressure to sell is happening only because properties are being marketed now too far above what their actual value is, which is already super high compared to, what most people have bought at. So I think you're going to see sellers put their properties on the market, and the days on the market are going to start to go up. I think sellers aren't going to necessarily accept less across the board for properties that are properly priced in the market. You'll see prices coming down, quote unquote, from properties that are overpriced that are being sold at a proper valuation, which is still high. But it's not high, it's the new norm, but it's higher than what most people are, anybody that's been sitting on the sidelines waiting to buy in Las Vegas. Oh, I think it's going to get better. It's going to be better. And I keep telling everybody for the last year and a half, don't wait. It's not going to change. Prices are good. Our city here is continuing, the county of Clark is continuing to see migration from other states. So we're continuing to grow steadily. They're saying another 3% increase in population between this year and next year, which continues demand. Continues demand for rental properties. Rental market is super strong here. It's going up an average between 8 and 11% in rent year over year for the last 6 years, which I did forecast. So anyone, if anybody's been our follower and client back then, you'll remember what I was saying about rental properties, and the investors that did it are super happy now. That's not going to change either. The rental market, we don't have a lot of properties that are multifamily for rental. So it's still we haven't reached that balance or that tipping point where it starts to, kind of level off. So I still think we've got a ways to go. There's a lot of new construction for multifamilies going on in our town. So that will continue to feed the demand, and at some point it will level out. But for now, I don't see it happening in the near future. People are moving here, they're renting, they're getting their jobs stabilized, and then they're buying, 12 to 18 months later, depending on whatever kind of a lease they signed. So having said that, I think the market is ripe for continued growth. I think inventory is going to swell a little bit, and you're going to start seeing people are going to say, oh, well, it's no longer a seller's market. It's more of a buyer's market. It's starting to balance, going more towards the buyer's market again, which could be true to some certain degree, but it really only is true fully if you are a buyer that comes to the table ready to buy. So if you're a cash buyer, proof of funds, liquidity, so you can execute in 21 to 35 days, that's, you're gonna have an advantage, because you will be in a market prepared to buy against other people that have maybe been on the fence getting a loan. And if they're on the fence getting a loan and they're not, they're just kind of testing the waters, but they're still not convinced, maybe because the real estate agent doesn't give them the right information, or they don't have enough information to make a decision on. And so they're just, oh, well, we'll just feel the market out. You're going to miss out. You're going to miss out on the right properties. I'm telling you that right now, because prepared buyers in the market, they're ready. The ones that have been watching the market, they're ready to buy. They know that prices are going to continue to go up and that we're in a little bit of a stagnation period. And so from an inventory standpoint, that's what's driving, loans under 950, is because you're going to see a little bit more inventory in that. And then the million plus, which has the inventory right now, is going to continue to shrink. And that's what's going to cause the urgency and the velocity to increase on properties. Now, what does that mean short-term and long-term? Well, what it means short-term and long-term is that I believe our inventory is going to rise a little bit. And I do believe that at some point, and I'm forecasting the end of the third quarter through the fourth quarter of 2023, we may see a slight tick up in foreclosures, which will add inventory at that time. And based on where the prices are there, could affect pricing a little bit at that time based on how much comes into the market and how quickly. But between now and the end of 2023, I see continued rises in price. Is it going to happen as quickly as we've seen over the past 4 years, 2 years even? No, it's not. That rate has already been built in because people that have been watching the market took advantage of that market. But now that the eyes are on us again, and now that more of attention is coming here, and now that people are realizing that they don't want to be where they are at anymore, especially people in California, many are coming out here, Oregon, Washington, they're all migrating out here. Idaho, Utah, we're actually seeing an influx from Utah as well. So we're continuing to grow. Inventory is still mild. I mean, we don't even have, we're not a big like, a huge market to begin with, because we're, it's Las Vegas Valley. There's only so much that you have in the valley before you start to go up. And we're seeing that happen too with high rises. So it's really interesting, because people think that, oh, it's going to hit everywhere across the country. It's already going to start to slow down. No, not in Vegas, not in Vegas. Vegas is a strong market. It's continuing. So if you're looking to buy, and you're looking to buy, I'll give you the breakdowns for the different categories. If you are a residential home buyer and you're looking to buy a house, change a house, upgrade or downgrade a house, or upsize or downsize a house, you do want to be aggressive about buying, because prices will continue to go up. Your inventory, it's June 27th right now, your inventory is going to get a little bit better. You're going to have more choices now over the next 2 to 3 months. So you do have the ability, maybe you're going to see a slowdown in the numbers, but you do have an ability maybe to shop a little bit. But if you find the right property, pull the trigger, because there is somebody out there looking to eat your lunch. And I know that because I'm one of those guys. I do a lot of that kind of an investment, and I'll wait and I'll see an opportunity and I'll go in and I'll grab it. I'll grab it with an all cash offer. So that's the competition that you're seeing in the residential market. And if you are not a cash buyer and you need to get a loan, you want to get your ducks in a row now. Get that paperwork started, get those pre-qualifications done. Our partner, Nelson, I can't speak enough about him, but you can choose anybody that you like. If you have a relationship already, go out and get that relationship kick-started again, restart that, and get yourself prepared to buy, because you're going to need it if you're looking for a house. That also applies to residential real estate, raw land that is being used for development of a house, a residence. Okay. Now that also, I'm going to segue into commercial, that also applies to commercial land. Raw, undeveloped commercial land right now is at a premium, and it's going to continue to be at a premium in Las Vegas on all sides of town, east, west, north, and south, especially the south. That area is developing crazy, especially now we got the announcement that the train's coming and all sorts of stuff is happening. South of Las Vegas has been good since I moved here 25 years ago. And it's continuing to be on fire right now. It's a shorter drive for people from LA too. It's 20 minutes, 30 minutes less than going into the, Summerlin or northern areas. So there's a lot of appeal there. Industries popping there. Commercial industry is popping. Industrial land, especially on the south side of town and the north side of town, is happening. So if you're in the market for industrial or commercial, definitely contact us. We've got some great opportunities that are happening, but they are going fast. What we have today isn't necessarily available tomorrow. Commercial market is super strong, but it's still reasonable enough for somebody to come in and make some money. I think purchasing existing locations is more difficult than purchasing land and developing at this point. The inventory is tight and it's moving quickly for commercial property that is already existing, especially, I mean, fix and flip commercial properties don't even really exist here much. I mean, their properties are in need of rehabbing, but the market margin for a flip in a commercial property very low. That's another thing too for investors to know, just generally across the board. The margins here are smaller for fix and flip properties, both residential and commercial. But industrial development is hot. Land is still available and the demand is still continuing to be high because lots of companies are putting bases here and plopping down locations here, logistics centers, corporate offices, all sorts of that stuff to take advantage of our really good tax structure, while a lot of these other states are changing it. You know, they're already disadvantageous structure. So we have a lot of things going for us that are bringing people here, bringing businesses here, that is bringing jobs here, and then the continued building. We're slowing, but we're not slowing because of demand. We're slowing. That's the thing that a lot of these financial reports that you'll see, like on CNBC, or you'll see these, you know, different reports say, well, you know, Bill, we're seeing, you know, less new starts. Well, they're making it sound like it's because of demand, but it's not. It's because of the supply chain problems and the cost of materials and getting labor and materials to the site. The builders can't, you know, continue to start projects when they can't get the materials or the workers to do it. And that's the issue. And that's what's skewing a lot of public perception. You know, oh, well, demand is changing. It's not. Demand isn't changing. People that want to build a house still want to build a house. It's just taking them longer to do it. And the builders can't get the stuff that they need to be able to continue to get all the new starts. But what's going to happen is once they are, you're going to see those things shoot through the roof and everybody's going to say, well, demand is back. Well, the demand's already been there and it hasn't gone anywhere. It's not going to go anywhere. So that's the conversation for that. If you have any questions on that part of the conversation, please feel free to put something in the comments below or just send me a message, text me or email me. The other parts of that I get asked about a lot are the water issue here in Las Vegas. You know, the news is going crazy saying we're, you know, reaching a dead pool level. And if those of you that don't know what dead pool means, there's a level of pressure where the lake could shrink to where it can no longer produce electricity. And that's like the scare news that's going on right now. And so I was asked that recently, and here's my experience and reaction to it. I lived here now going on 26 years, and I have done a lot of research on the lake and on other lakes that produce electricity for towns. And in our particular situation, as also is consistent in a lot of other areas, lake amounts ebb and flow. Now, when you're talking about, you know, a dam on the Colorado where there's other dams above us, you know, further upstream, it's a man-made lake. Why can't we just replenish it? And we can, and we are. But what's happening is that the news is sensationalizing it because there's not much else bad going on in Las Vegas. So there's not much else to talk about. Things are pretty good here. So you get areas of the lake, you know, a lake has different elevations, and there's areas where they're a lot higher, and yeah, the water level is shrinking, and all of a sudden you're seeing a boat sticking up that was, you know, that sunk years and years ago, and you've all heard the news about the dead bodies and stuff there, and they're, you know, becoming revealed and things because it's making it sound like this lake is just, you know, and yeah, it is losing its height, but it's sensationalized news. And I'll tell you why, because as of the date of this recording, we have not seen an increase in the cost of water, and we have not seen additional restrictions on water use, both of which would occur if water levels were something that were seriously affecting or going to be in a critical situation for the city and the county. And we're not seeing that. As of right now, we're not seeing that. If new information comes into the market, of course, we have to reevaluate it, but we're not seeing it. And I've talked to a lot of people who lived way back in the day in California when they had a drought, and they were doing things like limiting the time of day, you know, this window of time of day when people can take showers. recycling water like in your yard, putting rain things out. We're not there. And even the cost of water hasn't gone up. So it's not at a point where I believe at this point that it's a critical element, the way that the news is sensationalizing it. I think the news is doing a lot to try to continue, which is why you keep seeing story after story after story about it. If you're on any of these news apps and you have Las Vegas as a keyword, I mean, it's just they continue to bombard us with this, negative news, Deadpool, all this stuff. None of that is actually happening as of right now. And so it's really important to know that, people that are, in my experience, the people that run our government here locally, the county, the city, they do a really good job. The water district, they do a really good job of forecasting things out. Las Vegas, one of Las Vegas's major, in my opinion, major advantages over other places is the fact that we are a very planned out town. Things really get thought through. It's not easy to get things through our councils and our boards. And it's, they really think them through, and they have great relationships with people around us. The things that I heard last is that they are still negotiating upstream for other sources of water to be, released to us. I hear that those are conversations and negotiations that are in the works. I'm very confident that the people in Las Vegas that run things are going to make sure that they do what is necessary to be done to continue to supply water to our town. We have natural springs under our town. We have natural springs in Pahrump, which is right around the corner. Huge aquifers over there, huge aquifers to the north of us in Armagosa. We have a lot of options. I think that our town right now, as of recording, is going to be doing pretty well on that, even though it is a news topic. I think it's really more of a sensationalized news topic than it is of anything else. We are not at a critical point. We have not seen any kind of restrictions or fees and fines for using water and stuff like that you would normally see when a situation becomes critical. Having said that, I think I've covered most of the main topics. If anybody has any questions, or if anybody would be looking to buy or sell a property, it is a good time to get that conversation started. So please reach out to me with a text or an email or a comment, and I will be happy to set a time to chat with you. You can text me at 702-930-2619. Send me a text and we can set up a time to chat and talk about what your goals are. Thanks so much for joining me today. Thank you for being our followers and our clients. Have a great day, everybody.